The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed.
Welcome to Stock Take. My name's Gaurav Sodhi. Joining me today is Graham Whitcomb, all the way from Vancouver. G'day, Graham.
Hi, Gaurav.
And with us in Melbourne is Mickey Mordek. Hey, Mickey.
Thanks, Gaurav.
This is maybe the most international edition we've ever had. We've got me in Sydney, you in Melbourne, a producer in Sydney.
Except for last week when it was
and
the
you're
same.
in Vancouver, Graham. Was it the same last week? Oh, I must be
Yeah,
losing
it was.
Graham,
But this is definitely one of the most
One of the
international
most.
editions.
I know. Well, I just remember in the days where we all used to sit in a room and do it, and
Yeah, I
how
miss that.
foreign this used to feel, and now
Where
it kind of
humans
feels
sat
normal.
in a room together.
I used to feel like I
Back
was
in
on the
those
radio.
days.
Did you hear Kerry Chant the other day say, when you're walking down the street, don't talk to anyone, don't smile at anyone, don't make conversation,
Why?
because you're not supposed to interact with people at the moment.
Well, I
Graham.
think that's
Did you know
just
that?
that's just good advice in general. I think if someone
was
just
thinking
started
about that.
smiling and talking to me randomly, I'd be like, it's a bit odd.
I was thinking about that. I was thinking, well, when's the pandemic advice going to start? Yeah, no, that's what we should do. Right. All right. So we're all over the place. We're
already
two of us
lost
in
it.
lockdown, and we have already lost it. Yeah. Okay. Let's talk some stocks, gentlemen. Graham, can we begin with you, because there's some interesting developments over at Crown. This has been a bit of a roller coaster, actually. This is supposed to be a stable, high quality casino business. Casinos are renowned for just being a license to print money, but there's a lot going on in this business at the moment, and it's far from stable. So tell us the latest update on Crown and what it means for the business.
Yeah, Crown is just an absolute circus at the moment. You're right. It should. I like every time I read it. Well, it was actually interesting yesterday. So there was this big Royal Commission going on. There was some crazy revelations that came out yesterday, and the stock went down 1% or something.
Yeah, I could not believe that.
And I think people are just so used to this being a disaster of a company that it's all just built into the price already. They think that I think they just assume that there's going to be worse to come, and so the share price doesn't budge when it does. But anyway, yeah. So Crown should be a stable business, and the casino floor is a really great business, or at least churns out plenty of cash, depending on where you sit ethically with it. But in terms of the management of the company, the past decade has been ridiculous, and the more findings that come out, the more Crown digs itself into this hole of how poorly run it has been. There seems to be this culture that pervades the company where it's just trying to get away with whatever it can. It takes no responsibility. It doesn't listen to the regulators. It actually actively pushes against them and tries to prevent proper inquiries, which is just not the way that a company in that position, highly regulated, that's holding a very valuable casino license should be behaving.
Does that surprise you, Graham? I must admit, when all these things coming out about Crown, it really surprises me. I mean, in our business, we know our business depends on our financial license, and everyone does everything they can, to make sure that that's one of the most important things. That our behavior is always perfect for that reason. I just assumed every other business that held a license behaved the same way and thought the same way, but clearly that's not the case. Is this widespread in the casino industry?
Well, it doesn't seem to be widespread because Star doesn't get into nearly as much trouble as Crown, but Crown's,
Right, okay.
There is just an arrogance around Crown's culture. It just seems to be, who knows why it developed or why it's still going on, but it is ridiculous that they first of all got in trouble, and then instead of just admitting to their mistakes, saying that we're going to do better, they actively start fighting with the regulator and the government who they depend on for their existence. It's just kind of nuts. So anyway, yeah, the most interesting part of the Royal Commission that's happened so far is that Crown accidentally sent this spreadsheet explaining how they evaded taxes for the last 8 years, which then triggered this other tax evasion investigation. So they can't even get the basic hearings correct. They end up helping the prosecution. It's ridiculous.
Geez, they can't even evade properly.
No, this executive sent this spreadsheet, and it ended up landing them in a $50 million tax evasion penalty. So
Look, I can't. I don't really understand the share price at the moment. To be honest, I mean, it seems to me. Perhaps I've got this wrong, Graham, but it seems to me that the casino license is under genuine threat. The board is surely kaput at the moment. Right? Probably every single person needs to be replaced at some point. The license may not be around. Why is this still trading at $10? I would have thought this was sort of a $4 or $5 stock at this point.
well, I think you're right. The board and management are going to have to leave. That was one of the recommendations that's come out so far in the Royal Commission, and it's hard to imagine that the current management is going to stay in place. Having said that, there is still a lot of value there, and if the license isn't cancelled, which it doesn't seem, even though that's one of the possibilities and it's a threat, it doesn't seem likely just because of the social disturbance that it would cause. Crown's one of the largest, well, it is the largest employer in Melbourne.
Oh, wow. Okay.
And so just kind of shutting down this building would have implications for thousands of staff and then all the people that depend on them. And it's a huge tourism attractor.
Right.
And so my gut says that it's not going to cancel. The license isn't really in danger. But what they could do is they could remove all of the management, get rid of the board, and then put the company under some sort of suspension, or either suspend the gaming floor and let the rest of the hotels and restaurants keep running, or maybe put it under some sort of heightened supervision so that, well, they're just monitored for all their wrongdoing.
All right, you'd think it's and I guess what's becoming clear is the business is a sitting duck takeover, isn't it? If the gaming floor isn't operating, but the assets are largely intact, and the problem is with management, well, then the new management will sort that out, won't they?
Yeah, I feel like that might be part of why it is maintaining its value, is that it's just so bad that it's going to change. It's not a matter of if. It's this business either is going to be here in a year or it's going to disappear, and the odds are that it's still going to be here and still be very valuable. It's just going to have a lot of changes along the way. So I think, if it can get its act into gear, it's worth much more than what today's share price implies.
Interesting. Now, in most industries, and I've noted this has happened in another industry you cover, in fact, in sleep apnea at the moment, with Philips having a giant recall, the share price of ResMed and other competitors has had a big jump. And that's what you'd expect in an industry when one big competitor kind of implodes and the other should benefit. Are we seeing any translation of that for Star? Is Star benefiting somehow? Could they be in a position to take the license over? Could they take anything from Crown?
They may benefit in the sense that they've proposed a merger with Crown, and so that would tie up the risk for them, which is that Crown Sydney opens and then removes a lot of business from their casino. So a merger seems possible. I might even think that that's the likely outcome, that the Royal Commission will say, we just don't want Crown's management there. We're much better off creating a monopoly with a management that we trust by encouraging the merger with Star. The downside, though, is that by Crown kind of shaking the cage so much, it provokes the government and the regulators into increasing scrutiny of the whole industry. So they've already suggested a ban on junkets, which are the groups that bring in mostly Chinese visitors for VIP sessions at Crown and Star. The government's already suggested banning those, which would take out a huge chunk of Star's revenue while also punishing Crown. So it's a little bit of that case where if you've got one naughty child, both children end up missing out because you don't want to reward the bad one. Star has some things to gain, but I think on the whole, it would just be much better for everyone if Crown was a little more responsible.
Understatement of the year goes to you. Yes, that would be better for everyone. Mickey, have you ever been tempted by this industry, and what's has been your reaction to what's going on over there? I mean, this is in your backyard, isn't it?
Oh yeah, I've always been kind of surprised with the things that Crown has gotten away with. I think it's one of the only venues in Melbourne where, if you're rich enough, you can smoke inside, which is not allowed at any other venue. So it
Hmm.
seems to have these sort of special exemptions for certain things, but um, yeah, so I mean, I don't know. I guess in terms of like their performance, so some like I agree with everything that Graham said. Like they should be nice monopolistic assets, and they've got licenses to um, handle the gambling, but they just haven't performed that well. And I wonder if those kind of monopoly type businesses can just breed this type of management where um, they do get a bit complacent and so yeah, so but so I agree with everything that Graham said, but I guess it's just a case of getting the right management in there and
Hmm.
and sorting through some of these issues.
Now, the difficulty here, Graham, I guess, as someone who doesn't know the company all that well, I kind of look at what's going on and the quality of management. I just kind of shake my head, and I don't want to be involved with it. Is that the wrong reaction? Is this the sort of business we should be looking at with a bit more desire at this point? Is it more interesting now than it was before?
Well, I think the ethical side is an interesting one. We don't have it in the ethical fund for the reasons that it does get itself into trouble. My kind of
Hmm.
stance with these businesses is that if they're doing something legal, which Crown isn't always doing, but
Yes,
in
that's right.
general, if they're doing something legal and that's permitted by the government, they're going to exist. And you would rather have them in the hands of responsible owners than just leave it to the bad guys to run. So I don't really buy into this argument that if you find that Crown is a repulsive company, that the answer is to not own it. I think instead you should be willing to own it and then use your voice to vote for change or a different board or whatever you can to make it more to your liking. And if you really don't like it, then you can avoid going to the casino and not give it any money. But kind of throwing your hands up and saying you don't want to own it and that the bad guys should get richer faster than you doesn't seem to be a great strategy.
Well, I don't know though. I guess because like the argument is, I guess you're pushing up the cost of capital for these businesses and making it harder for them to get money. Um, well, I'm not saying I don't have a particular view on Crown or anything like that, but I guess it's just a broader argument, which is if you make it harder for these companies to get money, not just as shareholders, but I guess also if you're financing them as a banker or something like that. Um, and I think it is having real effect now across like boardrooms, and companies are taking a lot more care of. I think it's becoming like a real thing.
It's tricky though, because our general advice when we see a business with dysfunctional management is generally to stay away, right? We rarely would recommend a buy in a business with all this stuff going on, and yet we're probably a bit more interested in Crown than than the facts would suggest.
Well, it's only because Crown, at its core, is a ridiculous money machine that it can. I like that Warren Buffett quote of, "You want to find businesses that can be run by a ham sandwich because one day they will be," and I think Crown's a good example of that. Despite 10 years of mismanagement, it still
Hmm.
churns out hundreds of millions of dollars of profits. It's still growing at a decent clip. And in terms of the argument, Mickey, about you want to raise its cost of capital, that might work for something that's capital intensive like a coal miner or something along those lines. But Crown turns out so much cash that it hasn't needed to raise capital for a decade. So you're not really preventing it from operating in any way just by not owning it.
Yeah, yeah. Well, I don't know. I guess it's yeah. It's I guess you can take that take that view. It probably doesn't affect them. But I guess this is the whole argument behind the ESG investing. I guess is whether it has an impact or it doesn't. Um,
Yeah. And there's something
uh,
to be said about if you just don't like the idea of going to sleep at night knowing that you're making money from problem gamblers, then that's that's a pretty good argument for not owning it. But I
well, I
don't
See,
guess
see.
there's like an ethical way to do it, almost anything. I would have thought, like if you've got people that want to play on your machines or play a game, then I guess that just comes down to your personal preference, which games you like to play. But yeah, there's just ethical standards around almost any industry, isn't there? I mean, it's sort of
Yeah,
like it's never black and white. There's always this nuance and grey areas around.
yeah, and the
Ha-
government can change all those things around like pokie machines, which are the main problem for the gambling industry because they are just so addictive. So they can influence things like um, ensuring that gamblers have to get up every hour or something or other to try and break the cycle. But that was actually one of the things that came out in the Royal Commission was that Crown had let one gambler at least play for 96 hours. So
Wow.
yeah.
it doesn't really have their best interests at heart.
Hmm.
Mm. Well, I guess as well, and if your business isn't good for society, then at some point that that will probably come back to bite you, in one way or another, and that's probably what Crown's going through at the moment.
I don't know about that, Mickey. I know that's I've heard that a lot, and it makes some intuitive sense. But when you go back and think about it, I reckon the best businesses are those sin ones. That I heard some investors say this as well. I think it was Howard Marks or something. A really famous big shot said that one of the things he targets is the seven deadly sins. Any business that focuses on vanity or gluttony or greed, any businesses that target it's those human emotions,
Hmm.
those tend to be really good ones. And the number of businesses that do that is surprisingly broad. You think anything from Facebook all the way to LVMH, which is nothing more than a glorified vanity machine, right? Why is selling someone a $20,000 handbag more ethical than selling someone coal or alcohol? I really struggle with that question. Facebook has got to be, I've said this before, but it's the single most destructive, worst product I have seen in my lifetime. And no one has a problem owning that on an ethical basis. I just think these are really, they're
Well, ethics is
uh,
subjective. No,
yeah.
it's not really. I guess there's it's an entire field, and there's lots of like nuanced arguments. I think to be made about what is and what isn't ethical, and people have their own preferences about. I guess if you were thinking about it from maybe not thinking about it from a share market perspective, but maybe just thinking of the different ways that you could make money in life. Like there are lots of illegal things you could do to make money, but like, would you want to do them? Maybe not.
Mm,
Or so there's just that personal decision about, do I want to be a part of that. And I'm not saying that answer will be different for everybody
mm,
as well. But uh, but yeah, if you look at like just businesses that aren't, like, I guess selling a handbag is one thing, but
mm.
if you've got a business that actually just isn't doing the right thing by its customers, or isn't doing the right thing by some sort of stakeholder, then probably it'll get regulated or it'll get sued, or
Yeah, no, I
um,
understand.
you know,
Yep. No, no,
yeah.
there is a clear distinction there. I didn't mean to make a equivalency, but uh, they have their own degrees of ridiculousness and damage. For me, as a personal investor, the difficulty is weighing up not the ethical consider. I have no problem with casinos. My problem is with lousy management and persistently lousy management with a destructive, long-term, awful culture. Like those companies, I generally have a rule to avoid them, and here's a case where all those qualities are present in a business with terrific assets, and and as Graham says, a license to print money. So I'm really struggling with the investment decision here on Crown. So Graham, before we move on, give us a final verdict. Should we be buying now? Should we be selling?
Well, I'm not sure that it swings. Well, it does swing on what the Royal Commission does, and we don't have any special insight into what they end up recommending to the government. It seems unlikely that they're going to cancel the license, and so if you assume that the Crown is able to continue operating in mostly its current form, but just with different management, and that could end up being a good thing for shareholders. We've got a buy price at the moment of $8. The stock is at the moment at $10 or so, so it's not too far off from where we would consider buying it. but I think we need a bit more of a margin of safety before that day comes.
Okay. We'll look forward to some more research on Crown, and I trust you're keeping a close eye on it. Well, so you can
We're
barely take your
enjoying the
eyes off it.
show.
There's so much going on. Yeah, I know, right? Okay, well, from one sin industry to another, geez, this is going to have us in trouble, isn't it? We're moving from casinos to coal.
You can call it the sin edition.
Yeah, except I think we got a green business as our third stock to talk about today. Maybe we should change that. Maybe it's too late. Well, let's stick to coal anyway. I've been talking about coal for a while now, and I've said that it's maybe the most mispriced asset in the market at the moment, and that comes despite the coal stocks we've been talking about, which is Whitehaven and New Hope. The share prices are up. Whitehaven has doubled since we first slapped a buy on it, and New Hope is kind of meandered a bit more. It's down from when we first recommended it a few years ago, but it's up over the past 12 months quite considerably, somewhere in the order of 80% or so, I think. So there's been a big rebound in those equity prices, but that pales in comparison against the rebound in the actual commodity price. So thermal coal prices, coal is a bit more complex than gold or copper because it's sold with reference to grade, and so the quality, the benchmark in Australia is called the Newcastle coal price, and your coal has to meet a particular standard, otherwise it gets a discount or a premium to the benchmark. And so I'll give you the benchmark prices, and every coal mine will be a little bit different, but it's not miles different. So the benchmark prices moved from under $50 this time last year, and it's currently about $150. That is extraordinary. Coal prices, thermal coal prices are now at, I think it's like 14, 15-year highs. And that's happened so fast within the space of 12 months. And it's happened because the price fall was probably exaggerated because of decimated economic activity due to COVID. And also, I think a lot of market behavior that's just people believe that coal was always was going to die very swiftly. And it's rebounded as economic activity has rebounded. And because there are so many supply constraints on coal, the supply response has been largely absent. So you've had a rebound in demand, no new supply, and prices have just surged. And it's hard to see why that would stop, really, because it's very difficult to get any coal to the market at the moment. Coal prices in China are 2 or 3 times what they are here in Australia. So the Chinese may think they're punishing Australia for not buying our coal, but in fact, they're paying the highest coal prices on record for that decision. And it makes you wonder how long that might last. In any event, the point I wanted to make was that coal producers are now insanely cheap on any metric. I mean, the free cash flow yields are extraordinary. If spot prices persist anywhere, if coal prices persist anywhere near close to spot, then these things are just so cheap. And I'll go through how cheap in a moment. But first, I just want to get your reaction, guys.
Do they sell? Do they sell at the spot price, or they have kind of locked in contracts, or is that how it works?
Yeah.
Or yeah.
Okay. So both businesses sell into spot prices. Whitehaven traditionally has earned 10, 15, 20% premiums to benchmark. It sells perhaps the highest quality coal in Australia. New Hope sells at a very small discount to benchmark, 2 to 5%. So it's basically the benchmark price. So the prices I've quoted are basically the prices they're going to be getting. Now, it's important to realize that the rise in the coal price has been so swift and so recent that it's not really in the numbers. Well, it's not in the numbers at all. The numbers, if you're screening for coal stocks, still reflect last year's coal prices. And even the quarterly numbers, I mean, coal prices have risen so fast, they're not even in the quarterly numbers or in the half-year numbers. So I think that might be one reason the market has been slow to catch on. It's because it's hard to see unless you're following this rather closely. It reminds me a lot of Fortescue back at $3 or $4.
Mm.
And I'll hasten to add that I use any excuse to mention the fact that we upgraded Fortescue at $3 or $4, and maybe we can ignore the fact that we sold it like at $6 or $7.
Well,
Sorry, Mickey. So does that answer the
oh,
question?
you had me sold it. It's going to be the next Fortescue. I think. No, but yeah, it makes complete sense. I mean, so you're not worried about the price, because I guess if it's gone up pretty quickly, does that mean it could fall pretty quickly as well, or?
Yeah. Yes. I think the prices now look a bit silly, but look, I would have said commodity prices. I must say they still baffle me after more than a decade of covering this sector. The inertia with which prices remain is sometimes quite surprising. So iron ore. Let's go back to iron ore for a second. Iron ore is currently over $200 a ton. I've never seen iron ore prices that high in the time I've been covering them. I believe it's a all-time record, and they've persisted despite everyone's expectations that they would fall again. And they will fall again. It's just a matter of when. Coal, I think, is about the trajectory is very similar. The prices at the moment are crazy high. I mean, historically high. I don't
How
think I've
much?
seen them.
How much of that do you think is due to speculators bidding on like futures contracts versus actual demand at that price?
It's hard to do with coal. It's not really a the coal price has not been financialized the way oil, in particular, gold, and to a lesser extent iron ore has been. It really inventory buildups can move the price up and down a long way. There might be there are some coal that gets contracted, and when word of those contracts go out, um, other buyers may bid up the price to reflect those contracts. So there are reasons why it can fluctuate in the short term up and down. So it's really difficult to get supply out at the moment. There hasn't been a new coal mine built for years, and even to get incremental new volumes out is difficult. So I don't think there's anything more complicated or sinister here happening than a mismatch between demand and supply. There's been a very cold winter in Asia, and so coal demand is probably higher than it is on average, and that's pushed up coal prices. And as we know, in commodity markets, incremental increases in demand can have outsized effects on price because coal is an input in sort of thermal power stations. When you need power, you need power, and coal is a tiny proportion of the total cost of a power station, so they will pay basically whatever it costs to get that coal into their power station. So I think what we're seeing now is an unsustainable spike. So we're certainly not suggesting that sort of $150 coal is going to be ongoing. But I do think we should this idea that coal will die in the next year or two needs to be re-examined. And I've sort of used a $70 US dollar coal price, and even at those prices, both Whitehaven and New Hope at current share prices, remember these have doubled. They're still generating double-digit free cash flow yields, around 10 to 15%. And at spot coal, and I'm kind of scared to say this because it sounds so insane, but at spot coal prices, you're getting free cash flow yields of sort of 50%, which means they're gonna, within if we get 2 years of these prices, you basically get your market cap back in free cash flow. So this is really cheap stuff, and I'm shocked that no one else is looking at it. No one else wants to buy it, and the increase in both. Think about all the volumes written about iron ore, the broker activity, the fund manager activity. Every quarterly has something about iron ore and BHP and Fortescue. None of that applies to coal. No one is, we've had a very similar escalation in price, and yet there's been nothing written about it. No one's interested in it, and I think that might be an opportunity. I still think coal is cheap. Let's say that. But we've talked about the ethics before, and it's not going to be for everyone. There's lots of funds that can't buy it. There's lots of individuals who don't want to buy it. But if that's not you, then this remains a really interesting part of the market.
Well, that could be the opportunity as well, as you're saying.
Yeah.
If no one can buy it, so.
And the good thing is, I mean, it's not by accident that the two coal stocks on our buy list, Whitehaven and New Hope, are the two best managed in the business. They've got long track records of superb capital allocation. They've got high quality management. And these aren't companies that are going to get a windfall cash flow profit and then go and waste it. You know, they've built these long track records of good capital allocation. I think what you see is really high dividends and buybacks, and that's one way. If no one else wants to bid up the price of coal stocks, then at least that's an avenue to get returns for shareholders.
How much longer do you think the electricity providers could keep buying it at this spot price? Does that not flow through to kind of the public at some point as much higher electricity prices, or do they, I don't know, how do they actually cap that?
Yeah, in most markets, they sell into Asia, so I'm not actually sure how the retail price works in Asia. But in Australia, the retail price is very good. Electricity markets are really good at incorporating costs and then sort of passing them on. There's this, I think it's every 5 minutes now that the electricity price gets updated. So it's an instantaneous pass through. And you know, I mean, it's not as the impact of coal prices on the final electricity price is relatively minor in Australia anyway. I don't know what the situation is in Asia, actually. I don't know how those prices are determined. It won't be as sophisticated as it is here, but I imagine the economics are quite similar. So the impact of very high coal prices is probably not that important to the final electricity consumer.
Huh. What does make up the final price? Is it just a regulated price by the government, or?
No, it's often the actual cost of the generator, and the and the poles and wires is actually the largest cost. The distribution.
I think you can potentially get opportunities in these situations when there's just like a lag between kind of people noticing something and then actually acting on something. Because, as you say, I mean, if this is a sustainable price, or if it stays at these levels and they're generating 50% free cash flow yields, they don't need to do that for very long to make your money back. So, I guess it's just a waiting thing, really. Yeah.
I guess what really surprises me is that there's just there's no debate here. You know, in iron ore, because I follow iron ore quite closely as well. There's a really intense debate in the investment community about those who think from those who think that iron ore prices are roughly sustainable for several years, and those who think that they've peaked and they're on their crazy levels on the verge of collapse. And I've argued for the latter, and I've been wrong for the last year or so.
Maybe if they are selling into China, do they worry that that China will block imports or something, and so they won't even be able to actually sell it? Is that a risk?
Well, China has blocked imports, and that's already happened. And New Hope doesn't sell any into China, and I think Whitehaven. I'm getting them mixed up. One of them has about 6% of their sales into China, and the other one doesn't sell into China at all. So I don't think that's not really a big question. I think the larger problem here is just one of narrative. There's this really powerful story about coal, and that's just drowning out the very clear economics. And you know what else it is? It's a bit of ego as well. I mean, I remember when even come on guys, remember when I bought Whitehaven to you in the Dragon's Den? I mean, that was an awkward Dragon's Den. There wasn't too much enthusiasm for it, and I think a lot of good ideas actually that's the way they're received. It's not looking back, some of our best recos haven't been greeted with enthusiasm. They've been greeted to silence and incredulity. How do I say that word? Incredulous. They've been greeted with silence and incredulity. Thank you. Yeah. Look, I've given you enough to think about. I've made my points clear. Anything else to add, Graham? If I convinced you, Mickey, I think I can see you're tempted.
Well, yeah, I was pretty tempted a while ago. I've been tempted on several occasions, and I just haven't been able to pull the trigger. For I don't know why.
Just don't
I
want to
don't
make
know what
money,
it.
Mickey.
No, I know. That's my problem. I'm averse to making money. Well, I don't know. I guess for me, this is gonna sound maybe a bit silly, but I'm looking for companies that I can potentially hold and compound for a really long time. And I just I get that you might make, well, you should make your money back pretty quickly, and you can get that back in dividends. But then you've got this kind of problem in maybe 5 or 10 years. It's not really a problem necessarily, but you've got to reallocate and you've got to find a new thing. So I guess it's just more of a
Yeah, it sounds like you
style.
do not like
So
making money, Mickey.
yeah, so you would rather just not make all that money, so you don't have the problem of reallocating it.
Well, like I
Oh
think
dear.
yeah, it's yeah, like yeah, because I don't think it's easy to come up with good investing ideas, and I think I just want to make fewer better decisions than be kind of cycling in and out of stuff. I feel like I feel like this would be more of you wouldn't be one that you'd want to hold on to for 20 years or something like that. But
No, no. This is certainly. Let's be clear about what we're talking. This is absolutely a trade, and I would imagine within 2 years we would be out of coal altogether.
mm,
So yeah, I hear what you're saying, Mickey, and it sounds like you want something to buy that you can hold on to for a long time
just pass
and
down to the
compound.
grandkids, you know.
Right.
Yeah, so
Yeah.
I don't know, but I wouldn't be averse to like a small weighting if I didn't have other ideas as well. But and I think the investment case sounds
That were
good.
better than
So
50% a year.
well, yeah, I mean it's pretty hard to beat. I think you're talking me into it, Gaurav. I don't know. Maybe next podcast I'll have bought some. I don't know. That's the real test is if Graham buys some.
I know. Actually, if Graham buys some, we should probably go out and sell because at that point he's probably the last guy. All right, let's
No.
park coal there, and we've got another interesting stock, and this kind of ruins the sin stock that we sort of had going here. But Mickey, you've written about Genex, which I thought was a really interesting idea, but it was complicated, and I thought this might be a chance for you to just explain to us in simple language what this business is about, and that we might be able to understand it a bit better. So let's start at the very top. Tell us what Genex actually does.
So yeah, so I guess it's an interesting contrast to the coal stocks, but so I guess what's happening is that we're moving away from coal as in terms of generation gradually. It's taking a while, but most of the state governments have set pretty clear targets around the renewables, and so I think they're targeting 50% or more in most states by 2030. Uh, and then the problem with that is obviously you've got wind and you've got solar, which is great because they're obviously coming from free sources of energy. However, very variable, and problem is that the electricity uh, supply, which is very variable, must be matched with kind of the demand. And so it's very different, I guess, to having these coal generators that put out very consistent level of power, and then switching over to like these solar plants that are during the day everybody's rooftop solar turns on, and you've got just this absolute massive oversupply of electricity, and then kind of at night, when you actually really need it, because everyone's at home, they're turning on the TVs and whatnot. Um, there's very little. So basically, you just need this infrastructure, which is going to need to be built over the next few decades, which is going to provide backup capacity. So like if there's a blackout, you can just turn on the grid again, and just kind of keep the frequency at the same level, and obviously store a lot of the power. So Genex was founded, listed in 2015, and they had kind of this vision, I guess, to build out, a lot of these generation and storage type assets. So batteries, solar, wind, and they've got a hydro facility being built. And yeah, now they've got about $1 billion worth of these assets kind of under development at various stages.
So, Mickey, are they an investor in all these assets, or do they actually build, own, and operate them all?
Yeah, so they're building them, and they will own them with various contracts and things like that. So they've got 2 solar projects. Predominantly, they're based in North Queensland. They've got 2 solar projects which are up and running. And those kind of bring in pretty consistent revenues. One of them's got kind of contracted revenues with the Queensland state government. They've got a battery plant that's being built near Rockhampton, and these batteries basically can be really, really profitable when you get these big
What's a
surges.
battery plant? Can you just explain that?
So it's just a big battery. So they made like these lithium-ion batteries.
Oh,
So
like an actual battery. All right.
yeah,
Oh,
like
when you
a
say battery plant, you mean battery plant.
yeah, like an actual battery. So you may have read a few years ago, like Tesla made this bet, I
Yes,
think, with
that's right.
the South Australian state government. And they said, we'll go out and
Mm-hmm.
we'll build a massive battery in 100 days, and we'll do it really, really cheap. And then they actually did it. And so Tesla's now kind of like leading this field, I think, in terms of actually building out the technology for these batteries. But basically, what it means is that when you've got all this power that's being produced by wind or solar, it can just be stored in these batteries, and the batteries make a profit because they charge up when the electricity is abundant, so during the day, and when prices are low, and then they discharge it when the prices are high. But also they just provide services to the actual grid, because like when you've got all this intermittent energy, sort of you've got like it's speeding up the turbines, it's slowing them down again. So you've got this kind of inconsistent flow. So these batteries just kind of like level everything out over time.
And how do they monetize that? Who pays for the use of the batteries?
Well, there's different models. So they can contract out their services. So to whoever the state electricity provider is. So oftentimes they'll have some sort of like base level agreement with them, or they can just they can basically arbitrage the difference between low prices and high prices throughout the day as well. So they've got different models for making money. But yeah, providing services. So I guess where they really, really make good money is, like, for example, in South Australia, there was all those bushfires a year or two ago. I think it was 2 years ago now. And so there were these massive power outages. And so all of a sudden, you really, really, really relying on this backup capacity. And so I think that battery there in South Australia paid for itself within 2 years or something. So you get really good payback periods on them. The flagship kind of project that they're working on is this big storage facility and it uses 2 kind of adjacent mining pits, and you have water in the higher pit, and you have water in the lower pit, and then when the electricity is cheap, you pump it up, and when it's expensive, you let it flow down into the lower one.
It's like a hydro,
Yeah,
it's a little hydro plant.
yeah, that's right. Yeah, so pump storage hydro essentially. But I guess what they're doing a little bit different is they're doing it in 2 mines, mining pits, which has never been done before. So
Interesting. Okay. And can you tell us a bit about the people behind the business? This seems they're in a few different power methods. Does management have the know-how or experience to run these assets?
Well, so they were the founders were kind of former investment and bankers, and I think they'd been involved in some metallurgical coal businesses before, which they'd sold off. And like they've done a really good job of actually putting together a lot of this infrastructure because building infrastructure is pretty hard. You've got to navigate like pretty tricky approval processes and get regulatory approval, and especially when you're a micro cap. So they listed, I think they had a market cap of like $30 million. And so
Mm.
you can imagine now they've got $1 billion of assets under development. So that's um, and they did it without any capital behind, or not much capital behind them. So they had to like negotiate offtake agreements and financing and all these tricky things. So I think they've done a good job so far, and I think that the real company maker is probably going to be this pump storage hydro facility,
Mm.
because that will basically dwarf the rest of the assets combined. Um, and so that's I think a 3 or 4 year project to completion. Um, and then the idea is uh, that facility will be rented out to Energy Australia on a 10-year contract, which has inflation baked in, and then they can extend that for another 2 10-year periods if needed.
Wow.
So I guess like originally it was kind of attractive because um, you're looking at potentially like really long dated cash flows and really consistent, regular rising cash flows. And so that was sort of the initial attraction, I think. Yeah.
And with these projects, when they build them, do they pre-sell the output?
Yeah. So well, that's essentially it. Yeah. So I mean, obviously with the solar projects, like they just sell into the grid whenever they're producing solar
Right.
energy. But like the storage hydro facility is it's just a straight rental agreement. So it's almost like a property owner or a property trust in a
I
way.
see. Right. Okay.
Yeah. Yeah.
Because
So literally.
Infratel, we Infratel's was on the buy list. They owned a business called Tilt Renewables, and Tilt built
Mm.
these really big, massive scale solar plants. The thermo solar or just solar? I can't remember now. There's a difference, but I can't remember now. But anyway, these really big solar plants, and they would actually pre-sell the output on those plants. So they had a fixed margin on all the gigawatt hours produced, and there was actually something like 70% the margin, and that was fixed for years and years. And so it was really no wonder that when they sold that business, it sold for a gigantic premium to the implied price inside Infratel. So these assets can be really highly sought, but it does seem that the way you structure any sales agreements is an important part of how valuable they can be.
Oh yeah, definitely. I mean, and they're also they're flavor of the month as well.
They are a
So
bit,
I
aren't
think
they? Yeah.
so. I guess it's a good space to be if you have these assets, because most of them have just been bought. I think from the ASX, like any of the recent ones. I think there was Tilt and there was uh, is it Infogen? I'm not sure, but
Infigen,
there's
yeah, that got a
yeah.
yeah.
So like most of these assets, once they're up and running, they do tend to get bought.
Mm,
So they are pretty desired assets. But yeah, I mean, so for example, like this company reckons, Genex reckons that once they've got all the projects up and running, that something like more than 80% of their revenue will be contracted for the foreseeable future. So they can be quite good assets. So that was sort of the
mm.
attraction. The obvious risk is you've got to build it, and it's a world first, and it's probably going to be a complicated project, and so there is definite construction risk, I think. But but yeah, I mean, if you think that they can do it, then potentially there is a bit of upside there. So
And can you talk to us about the valuation and maybe the opportunity available?
yeah, well, I mean, so I haven't got the the numbers right in front of me, but if
Hmm.
I think we worked out that if they do kind of get to where they're going, or if they get all these projects
Mm.
off the ground, they're also looking at another wind project as well. it was something like $100 million in EBITDA potentially, which versus today's enterprise value, I think it's 8 or 900 million. So it's not.
All right. Okay.
I think that's right. But yeah. So I mean, so in terms of the valuation, I think it's not so much that. I think it's more the risk and whether you're kind of willing to take to back them to kind of deliver that project, essentially. Yeah, so there was
Well,
definitely,
as you've been talking, Mickey, I've just checked the EV. It's about 400 million on Genex. And there might be some
okay,
lease
yeah.
liabilities in
So,
there.
well, I guess because they haven't drawn down all of the debt. So
Oh, I see. They haven't drawn it down.
Yeah,
Okay.
yeah.
Right.
So there'll be more debt as they build that project, that hydro project. So I think on completion, it's like closer to like 900 million.
I see.
Which is so I mean, but I guess so if you've got 30 years of cash flow, that's not too bad, but you do have to be a little bit wary that you've got to actually repay the debt as well, and because they do have limited lives, so it's I guess compared to like a property trust where you can just kind of keep it with a stable gearing level for a really long time, and so that does need to be paid back as well, the debt.
Fascinating idea. I really like it. Graham, anything to add?
No, it is an interesting idea. I don't know enough about that industry. It's very different to coal stocks and casinos.
Yeah, I know.
Yeah.
A bit of a palate cleanser, isn't it? Mickey, I see they've generating a little bit of revenue now. Where's that coming from at the moment?
So it's those two solar projects. So they'll probably ramp up once they get this battery
They're up and
facility
running. Okay.
built. Yeah. So I dwelled on it for a long time. I think it was definitely an interesting one as well, and one we had a good look at. I think we just and if you potentially it's not a bad opportunity if you're happy to take a longer term view, but we just stayed off an upgrade at this stage. Like I think the construction risk is going to be something that they'll have to navigate, and but definitely one to keep an eye on. And it's an interesting company for sure. So it's quite an interesting project. So
fantastic. Well, I look forward to hearing more about that, Mickey. Hope you do bring it back at some stage because it sounds quite interesting.
Yeah, well, we'll definitely keep an eye on it, and we'll watch it from afar. So
fantastic. If there's nothing else to add, I think we should probably wrap this up.
Yep, nothing bad here.
All right, said with much conviction. Okay. All right, Graham, thanks for your time. I don't know if it's an awkward time over there, but it always is whenever we talk. So thanks for staying up.
Thank you for your consideration, Gaurav.
And Mickey, it's always awkward. So thanks very much for joining us.
Thanks, Gaurav. Cheers. All the best.
For everyone else, thank you for listening.